Welcome to the Painting Business Finance Podcast, where it's my mission to provide you with the strategies, tactics, and tools to making your painting business more profitable while creating more wealth for you and your family. Hi, this is Daniel Honan, your host for the Painting Business Finance Podcast, and today we'll be talking about benchmark data for the painting industry. So you can find out if your painting business is underperforming compared to other painting businesses of a similar size. So understanding how your painting business compares to other painting businesses from a financial perspective can give you insights on how to improve the profitability of your own business. And a good tool to see where you stand is to look at benchmark data. Now, benchmark data is basically performance metrics to industry averages or best practices from other companies in that same industry. So before we jump into benchmark data, I'm going to define a few terms. So when I use these terms, you'll be on the same page as I am when I use them. First off is direct costs. So when I say direct costs, I'm talking about the job site costs, like direct labor. So how much it costs to pay painters to paint whatever you're painting or pay subcontractors. That's direct labor costs. That's a portion of direct costs. The other portion of direct costs is your materials for that specific job. Paint, carpentry, whatever else is used to complete that job. So those are direct costs. Another term is gross profit. So gross profit is basically your revenue minus your direct costs, and what's left over is your gross profit. So when you pay off your job site costs, your direct labor, direct materials, what's left over is called your gross profit. Then we have net profitability or net profit, and that's what's left over from revenue after you pay for your direct costs and all your overhead costs, and what's left over is your net profit. Another term is current ratio. A current ratio is a ratio that's calculated on your balance sheet, and it basically compares your current assets, so your cash and accounts receivable, compared to your current liabilities, which would be like your Sherwin-Williams account, your credit cards, and that ratio kind of gives an indicator of how well the business can actually pay off its debts. Another term is cash ratio, which is basically comparing the business's cash on hand to its short-term debt, like credit cards or Sherwin-Williams account. And as another note, whenever I use a percentage talking about this benchmark data, I'm using a percentage of sales, meaning that if I say direct labor should be 40%, what I mean is 40% of sales. So if you took your labor cost and divided it by your sales amount, that would be the percentage in a decimal format. All right, so let's jump into benchmark. So in order to get a better understanding of how you compare to your other painting businesses of a similar size, we first have to break down the different sizes of a painting business. So there's generally 4 stages of a painting business. You have the startup phase, which is painting businesses that have revenue under $500,000. Then you have a build-up phase, which is $500,000 to $1.5 million. A build-out phase, which is from $1.5 million in sales to $5 million in sales. And then the enterprise phase, which is $5 million in sales and more. So let's go ahead and describe each of these stages so you can kind of place where your painting business is in one of these 4 stages. So the startup phase, which I mentioned, is businesses that gross revenue between 0 and 500,000. And what is usually going on here is that the business owner is kind of multitasking. They're doing a lot of things. They're the operations manager. They're managing the job sites. They're doing the sales, the estimates. They're maybe even working on the job site. So there's the owner is responsible for pretty much everything, and they're doing everything as well. So That's the startup phase, anything under $500,000. The build-up phase is from $500,000 to $1.5 million in revenue. This is transition to specialization, meaning that the owner usually has trouble doing everything, and so they're going to have to hire someone to do maybe the sales or maybe to manage the job sites. So they have to hire those roles and have those specialties involved. And this is also when there's a substantial increase in the customers, and there's a defining of roles and systems during this stage. The build out stage of the painting business is from 1.5 million to 5 million, and this is really where you have specialists, and then you also have managers, and then you have directors. So you have another layer of management in there. And this is really when the business is taking off. And then enterprise is basically adding in another layer of managers and trying to create a business that is sustainable, and it has different strategies on expansion and trying to identify more opportunities for growth. So that's kind of the 4 stages. Place yourself in whatever stage you're in. Basically, just take your revenue, and that's generally a good guide on to know what stage you're in. And as we go through these benchmarks, we're going to relate it back to the stage. So let's first start with direct cost benchmark data. So direct cost benchmark data. So this, as we defined earlier, this is your direct labor, direct materials, and gross profit. Now the question is, what is right? What looks good? What is the industry average, and what should you be striving for? So if you're using employees on the job site as opposed to subcontractors, your direct labor should be 35% of sales. So if you took your labor and divided it by your total sales, it should equal about 35%. And you can also do this on a specific job. If you had a job that was $1,000, that you charge $1,000, your labor should be about $350, 35%. Now, direct materials should be around 15%. There's some wiggle room in there, 15 to 20. It kind of depends on what type of job you're doing, but generally it lands around 15%. It's especially true for residential repaint. And so 15% for materials as a percentage of sales, and 35% for labor. And that equals, if you add that up, that's 50%. You subtract that from 100%, that gives you a 50% gross profit margin. So you should be targeting about a 50% gross profit margin. That's pretty standard across the industry. If you use subcontractors, your labor might be a little bit higher. It might be around 40%. And this is due basically to the fact that subcontractors are usually just more expensive. And they also, the benefit of using subcontractors is that they're a little bit more self-sufficient. They have their own equipment and that kind of thing. So they do have their benefits, but they are also a little bit more expensive. So with that, your gross profit will probably be a little bit lower than 50%, maybe down to 45%. So that is direct cost benchmark. And that goes across pretty much all the stages of the painting business, from the startup all the way to enterprise. That's pretty much across the board. You might see larger painting businesses get a little bit better deal on materials because of the bulk purchases that they can make. But for the most part, the gross profit is pretty standard, 50% across the board. Now the differences really lie once you get into the overhead costs, especially for the startup. If you're between 0 and 500,000, your profit margin, your net profit, so your bottom line percentage, is usually a little bit lower the lower amount of sales you have, because the overhead costs are a bigger portion of your sales. And when we're talking about overhead costs, we're really talking about your advertising costs, insurance, accounting, legal, anything that's not specific to a job site, all those different costs. So usually if you're below especially below 250,000, your overhead is just going to be a lot larger of a percentage of your sales than a business that's in the build-up phase usually. The reason, the best way to solve this is really just to increase your revenue so that overhead becomes a smaller percentage of sales, because overhead is not attached to how many jobs you do in most cases. So overhead costs for a startup typically run about 40% of sales, and that includes paying the owner, who is usually the operations manager and the sales manager in the startup phase. So that leaves a 10% profit in the startup phase. The thing to note here is that the owner, even though he might not be taking a salary, for example, the owner might be a sole proprietor or an LLC, a disregarded entity, which is an LLC taxed as a sole proprietor on their taxes. So they don't have to pay themselves an employee wage. But they should be tracking themselves like an employee. They should be tracking the hours and seeing how much they would pay themselves, so that when they do have to fill that role, they have a good idea of how much they should be paying the person to do that job. So for an operations manager, for example, they should be making about 7.5% of sales, and 7.5% to 10%. And then the sales manager should be making anywhere from 7.5% to 10% as well. So with the two of those added together, that's about 17.5% of sales should be going to the people or persons in that role. Now, it's important for you to know that those percentages, especially if you're in the startup stage right now, because you're probably not paying yourself a salary, and you probably don't have a good idea of how much you should pay someone that's in that operations manager role or that sales manager role. But you will need to hire someone once you hit the build-up phase, more than likely. If you're between 500 and 1.5 million, 500,000 and 1.5 million, you'll most likely have to hire someone to help you out with either the sales portion or the operations management. So knowing how much to pay them is important. And for the startup and build-up phase, you're really looking at 7.5 to 10% for those roles. And so it's important not only to know the percentages, but also to know, you as a business owner, what roles are you doing in the business? Are you doing both of those roles, or are you only doing one of them? So if you're in the build-up phase between 500,000 and 1.5 million, you might only be doing one of those roles. Maybe you're only the operations manager and you have someone that does sales. So, and if you're in the build-up phase, you should be getting 7.5% in this example, 7.5% for your operations management role. And then you should also be making a profit from the business, which is net profit of 13% or so if you're in the build-up phase. For the build-up phase, you'll see usually a slight increase in the profitability, and this is really due to the fact that overhead, you're able to make some gains on shrink overhead as a percentage of sales, because your sales increase, but your overhead does not increase as fast as sales do. And this trend generally continues when you move into the build-out phase of 1.5 to 5 million. The net profit margin goes up to 15%, and the overhead costs shrink with that to about 35%. So, and that levels out into the enterprise phase. 15% caps out. So, just so we recap what net profit means, if you were a business owner, you own the painting business, and you did not provide any services to that business, like you were not involved in operations, you weren't doing sales, you weren't doing any services to the business, you were just the business owner, you should be making 10% profit in the startup phase, 13% in the build-up phase, 15% in the build-out and the enterprise phase. If you're under those targets, you're probably inefficient somewhere. Either on the job site, you're not hitting your gross profit margin of 50%, or your overhead costs are potentially too high in general. So there's always caveats to everything. Like we mentioned, one for subcontractors are a little bit more expensive. But usually if you're using subs, your overhead costs are a little bit lower because you don't have those overhead employee type costs. So this is an overview of the benchmark data for the painting industry. We looked at it for the 4 different phases of a painting business. I hope this gave you a better understanding of how you're doing compared to other painting businesses of a similar size, and gave you some good ways to think about how to pay people as a percentage of sales and where your net profit margin should be. I hope this episode was useful to you. Until next time, thanks.